Short-term goals bridge the gap between where you are right now and where you want to be. It could be your career, your dream car, or a foreign holiday. A short-term fund helps you meet these short to medium-term life goals by offering liquidity and reasonable returns. These are open-ended debt mutual funds, which invest your money in debt and money market instruments like corporate bonds, government securities, treasury bills, commercial papers, certificate of deposits, etc. The fund is called short-term fund since the money is invested in instruments such as the portfolio duration is typically between 1 to 3 years. While investing in short-term funds, the duration serves as a guide since it indicates how much the market price of a bond will change when its yield or the rate of interest changes. Yields and prices move in opposite directions, so a fall in yield means an increase in bond prices, thereby positively impacting the returns of the funds and vice versa. The general rule is that when yields fall, a bond's price will rise by an equal amount to the fall in the yield multiplied by the duration of the bond and vice versa. Take an example. If the yield on a bond with a duration of 5 years falls by 1%, then the price of the bond may rise by 5%. Short-term funds are best suited for investors who are keen to build their core debt portfolio for the short term or medium term, or are keen to move away from traditional savings avenues like fixed deposits, postal deposit, etc. Short-term funds are a good option to complete your asset allocation in debt, and if you are planning to stay invested for more than a year. These funds can benefit if interest rates fall, resulting in capital gains for the fund and vice versa. Short-term funds can also be looked by investors wanting reasonable returns with easy liquidity and tax efficiency. If you stay invested for more than 36 months, the capital gains you earn are regarded as long-term capital gains. Long-term capital gains on debt mutual funds is taxed at a rate of 20% with indexation benefit. However, in long-term capital gains, you benefit from indexation, which means that before capital gains are calculated, the purchase price is increased adjusted for inflation. This helps to reduce the overall taxable capital gain amount. Brought to you by UTI Swatantra, an investor education initiative. To know more, log on to www.utiswatantra.com. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.